Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day as well as end of week market recap for Friday, September 16th. So we'll get right to it because the first video that I taped had the wrong information in it. So we'll we'll do this again. All right. So first of all, if you like these videos that I do on a day-to-day basis, please do me a favor, like and subscribe to the YouTube channel. I appreciate that. That helps me in everything I do. Also, if you are not a member of Tribeca Trade Group, here's where you go to sign up, tribecatradegroup.com, or you can just see my pinned tweet on Twitter. Why would I recommend this for you? Well, because, this has been a tricky year. One of the things that we've talked a lot about is, defense wins championships. Playing defense in this market has been, key to kind of survival and key to kind of getting past this year. When we look at the performance for the year, we've got the S&P down 18%. We've got the Qs down 27%. All right. We're hanging in there. My P&L is about flat for this year. Right. So I'm outperforming the S&P by about 18%. It's not a stellar year, but I'm playing defense. Right. That's the game plan until the market improves. Right. Once the market improves and when we see more opportunities, that's when we go ahead and attack and get on the offensive. But for now, my goal is to have a system for traders to kind of try to stay out of trouble, take the emotion out of the equation, and to capitalize when the market gets better, right? Green light, yellow light, red light in terms of, what we're looking at. So this is how you can kind of get involved in our room. And let me get to, just a couple other principles before we kind of get into the nitty gritty for the week, because this is a week review. So this is a good example. I've got a couple other, I've got a couple of the other funds, for the year, value has outperformed, still down for the year, 9.2%, but not as bad as growth, 27%. And then you look at this particular fund. Now, I don't talk negatively about this fund very often. I just don't want to throw stones. I don't think it's the right thing to do, but it is a good example, and there will be plenty of case studies done on this particular ETF and their manager, right? We know that their manager has high conviction. They don't change, right? They don't adjust to what the market is doing, right? Now, that could be good, that could be bad at times, right? My system and what I try to basically reinforce in my room, and of course, I'm not giving out any recommendations, right? Everything that we're talking about is for information purposes only. I'm simply telling you how I'm trading this market. And basically what I try to do is adjust to when the market changes, right? This market, there's bull markets, there's bear markets, right? There's sideways price action. What I try to do is basically, stick with the trends, right? When the market is going up, when we've got a defined uptrend, right? I'm putting money to work, right? We're being aggressive when that happens. When the market's in a downtrend, I'm being very defensive, right? I may be playing some things to the short side, but not that many. I'm more of a long only type trader, but I do play both sides of the market when we've got breakdowns like we do in things like Facebook. All right. So that's the goal. That's what we're doing. And so far, this year, and especially as I'm going to talk about, in this video, the month of September, we know that, talking about defense wins championships. Well, September is a month of survive and advance. It's the weakest month of the year. So that is, if you look at the last 5 days of price action, the S&P is down 5.2%, Qs are down 5.8%, small caps are down 4.5%. Should you be surprised by this price action? Probably not, considering that September is what it is, right? We also have a number of other things going on. We've got various different companies warning on profits. Some companies are not able to manage through this current environment, right? So that is troubling. Is the Fed helping, right, the situation? No, they're actually making the matters worse, right? We know that we've got more rate hikes coming, right? So the big data this week was the inflation data, right? Came in hotter than expected. What was the result of that? The market adjusts. right? So next week, right, the main event is Wednesday, the Fed meeting. Powell speaks. Powell will give his announcement. The Fed will give their announcement at 2 o'clock on Wednesday. 2:30 will be the press conference, right? So the market has adjusted. You're going to hear about you're going to hear from various different talking heads, talking about what they expect for next week. You don't have to listen to any of that, right? Fed fund futures tell you exactly what the market is pricing in, right? In my opinion, the Fed doesn't really want to, for the most part, 90% of the time, the Fed doesn't want to surprise the market. They go along with what the market is pricing in. And they've walked that, through every time that they have Fed speakers, they've walked it there, right? They've said that various different ways that they want equity prices to go down, right? So 75 basis points is very close to what we're going to get. Remember that the Fed moves in 25 basis point increments. So right now it's a little bit above 75 basis points. What's the one thing that really changed this week and the last couple of weeks, right? Well, that's the hikes, the path of the interest rate hikes over the next couple months. Remember, one of the things that I had talked about was that you've heard me talk about in some of these videos over the last couple months is, hey, if we can get through the September rate hike, if we get through the November rate hike, right, then we've got some blue skies ahead, right? Because we were looking at roughly around 75 basis points and then another 25 basis points. Look at what has changed here over the last couple of weeks, right? Not only do we have a 25 basis points most likely coming for November, but we're actually pricing in another 75 basis points. So all of this has adjusted, right, and adjusted higher. So, what was just one or two more interest rate hikes, right? Now we've got, if you look out to February, now we're looking at 200 basis points of possible increases that are coming up, right? So that has changed, right? And equity prices have changed because of that, right? So the implied rate of where we're going to be in February is 4.3%. Again, that's higher than it was about a month ago, right? So the market has priced that in. We've seen, equity prices continue to kind of show lower highs here the last couple weeks, right? Or even last couple months. All right, before I get to the so I wanted to talk about the S&P technicals, but of course, that's a little bit of my commentary, right? Being defensive. So very interesting what we've had go on here in bonds, right? So I'm going to talk about the bonds and the dollar. Why do I always talk about those? Because first of all, there's a lot of implications with both of those, right? It gives you a sense of risk on, risk off. Right now we have headwinds, right? The higher interest rates go, the harder it is for equities. The valuations become more and more important when you've got higher interest rates. All right. So price, talk about a trend, right? This is going back since August 4th. Price lost the 5-period moving average. This is why I have the short-term moving averages on my charts. Really gives you a sense of what the trend is here. We've been going down now for a month and a half. Now we do have a test in here and we'll see what happens. But we use confirmation, right? We don't make predictions. We wait, we think this could be a pivotal area, right? But it's at least price has to get back above the 5-period moving average to start. Look at how many times that we've seen this intraday candles try to reclaim the 5-period moving average. You can't do it. Sellers are in control right now and they're selling a lot more. So that needs to stop. When that happens, I don't know. It could be around here, it could be at another time. All right, so let's do this correctly, right? When we're looking at the S&P chart, let's look at the weekly chart first. What do we notice with the weekly chart? It's a bearish engulfing bar. Where did that occur? Right at the bottom of value. That's a significant area. Again, what we're doing with these value areas, right? We're looking at volume at price, very significant, right? So this is, of course, all the price and volume activity, and we're putting roughly a standard deviation around that. And we come up with this level here, which is 40.71. We're back below that. That's no good, okay? So that's the weekly chart. Daily chart, one possible silver lining is that we did go ahead and take out that VPOC that we were very close to taking out back on 9.6 and 9.7. So that has now been taken out. And you could see a little bit of a reversal off that. For confirmation, what do we need? We need price to get back above the 5-period moving average. Again, that really gives you a sense of what the trend is doing. Below the 5-period moving average, downtrend. above the 5-period moving average, short term, we start moving back up, short term uptrend. All right. Again, what's significant about these version point of controls, right? Their demand and supply, right? This is where a lot of buyers and sellers previously met up, right? And they're pivot points. Sometimes there could be reversals off of them. Sometimes there's digestion. Sometimes if the volume is really big, price can blow past them, right? So one thing to watch too, and now we're going down to the 1 hour time frame, right? We almost took this one out, right? So again, we don't have to worry about this. If price stays inside the value area next week, then you don't have to worry about what's outside of the value area. That's the only time that you worry about these, is when price starts to trend below or price starts to trend up. Keep in mind, look at the one that we called, that was earlier in the week. This was taken out right before the CPI data. Okay, big swing up, took out the VPOC, and that was a reversal. Let's look really quick at NASDAQ. And again, we'll start with the weekly chart. Oops, sorry about that. Weekly chart, same thing going on, bearish engulfing, right? Back below the value area, right? That is a bearish signal, not a bullish signal, right? Couple other things here too. We did not take this out. We might be leaving it for another time. Could be next week. Bottom line is we're below these moving averages. Again, short-term trend is down, right? That tells me be defensive. What do we have on the 1 hour chart? Well, this, just like we did earlier in the week, perfect tag and reversal. We're also seeing, so VPOC to VPOC, right? We reversed off of this. We'll see. Your support to watch for next week is this version point of control. That's right around 11,800. Okay, you could even bring that down a little bit, maybe 11,790. All right, but there's your reversal off of that. That's the version point of control from all the way back in here. Crazy how that happens. All right, so that, that's the averages. I usually cover most of the stock setups for members over the weekend. A couple that I thought were interesting for the day, of course, ENPH, right? Holding up very well, up another 1.9%. Dips continue to get bought, even when this was downgraded about a week ago, right? I added into this one. A lot of people were questioning me on the broker downgrade. Broker downgrades, in my opinion, are great places to add to your position. All right, you have to be calculated though, right? Scaling in is appropriate. Right, and we had a little bit of a retest here, the 20-day moving average. Nice place to take some more profits. And I didn't add yesterday, so I'm still holding basically like the last 15% of my position at this point. Not confident enough to add to it. LNTH, right? Another one. Oh, sorry, LTHM. I get these symbols confused, right? All of the lithium names sold off a little bit. Let's see which ones kind of hold in here. This one looks very interesting to me. This has been one of the ones with the most strength, holding the 20-day moving average, right? Very strong at this point. Another one that I'm watching, which I just day traded today, right, was BJ Wholesale. Again, why am I day trading, right? Because the indices are in short-term downtrends, right? So you got to be quick with some of these trades, right? It's, for me, again, making, as I said in the beginning of this video, making adjustments, having a couple short plays on. I shorted a little bit of Google today as well, right? So keeping kind of right now, while the averages are doing what they're doing, having a little bit of a long short portfolio. That's not for everybody. That's just a little bit of adjustments that I'm making. I'm also holding less positions, right? When the price gets below those short-term moving averages, what am I doing? I'm reducing risk, right? These things will help me survive once we start getting positive signals, right? Also, so I like to keep it simple, right? Maybe not, the one indicator that we use, the market webs, is a little bit more complicated, but in some of the other indicators that I like to use, right? NYSE, keep it simple, right? Use this with a 10-day moving average. When it's upswinging and has a bullish crossover, right? You can use this as a momentum indicator, more advancers versus decliners. The wind is at your back. When you have a bearish crossover, now it's more of the wind is in your face, right? You've got more decliners versus advancers. You could do more shorting, right? But bottom line, being more defensive. So right now, there's no change in this. right? Another thing. So that's the again, the McClellan summation index. What about the oscillator? Are we oversold yet? Are we oversold like we were 2 weeks ago? Nope. We're kind of right back in the middle of this. Okay. So we're not as oversold as we were either. Right. So what do all these things sum up as? Right. Being a risk manager, understanding what the market is telling you, making adjustments. All right, guys, I will leave it there for the weekend. We'll do much more strategy setups and so forth. We'll talk more about the Fed meeting as well in the member video on Sunday. Thanks for watching. Have a great weekend, everybody.